folks, Scott here, and this is the wrap for Wednesday, October 2nd. Let's take a quick look at the daily charts. And you see a couple things from this chart. Unfilled down gap today. See, we closed higher yesterday, gap down, but we did close higher with a green candlestick. That's a little bit unusual scenario. I call them false up days. So it's an up day on a green candlestick, but it's a lower close. It's not a true up day. And it's also formed an unfilled down gap. So I'm going to show you the results of fading gaps after a false up day and an unfilled down gap when above the 200-day moving average. And let me just double check my settings. Those of you with Gap Trader, you can check your settings, see they're the same as mine. So above the 200, end of day stop. Whoops. There you go. About a 50% greater chance of gapping up following such a unique pattern, and in using an end of day stop has shown really strong historical numbers, above average win rate and a fantastic profit factor historically. Now it's not a no-brainer, right? Still only 3 out of 4 work without stopping you out, but it's been a pretty solid setup. Down gaps have had a very high win rate also, but have actually lost a little bit of money. So that's more of a neutral scenario because the average winner doesn't compensate for the average loser. You can often get some runaways to the downside. You see one big one here, but there have been others as well. So I'll rerun these numbers for our members in the morning just to confirm if a down gap is tradable or not, and whether or not an up gap is tradable, because quite frankly, using our MTG stop parameters, these numbers could fall apart, right? When you use an intraday stop, I doubt it when they're this strong, but you never know. So I'll rerun that, share it with our members in the morning, and my pre-market comments posted around 9:20 a.m., no later than 9:25 a.m. Eastern Time each day. Now going into today, let me show you how this was set up. And first thing I'm going to show you is our worksheet, because it had some interesting information, but today was a little bit unique, and I want to show you how to recognize these days in the future, because you could have gotten confused, and some people made some money today's gap. I did not. I avoided it. It was all about picking the right market today. Let me show you why I avoided it. And actually, I would have been stopped out in the ES, and I'll show you why in a moment. So this was the worksheet for today. So gapping down between yesterday's close and yesterday's lows was a real big area. It had the UCO zone and the UOL zone, and that was slightly attractive. My criteria is 60 and 1.3, so met my win rate criteria, but not the profit factor. Now this is 2 zones, so that means you're going to have to look at the guides. We did know, though, a gap down was not as expected, or at least for this one study. You can see up here actually it was favored when you add up these 2 areas versus these 2. So advanced concept there. But it was a good setup historically, so it did have one big positive. But look at the, let me scroll down, show you the gap guides. What the gap guide showed. It really mattered on the zone. So as I go through these markets, I can't comment on each of them, but look at the difference between the UCO zone, which is between the close and the open, and the UOL or UL zone. So good in the UCO, but weak in these lower 2 zones. UL is the blood zone, below the low of an up day, below the low of an up day. And it's pretty much consistent across the board in these other markets. So it was all about opening in the UCO zone, which meant it had to open above the prior open. But it was a big range yesterday, right? So that too was problematic, and that's what you couldn't see here, was the gap size issue. See the spider confirming these lower zones just in general are not as good. So here are my pre-market comments and my plan for today. Based on what I showed in the wrap last night, actually it wasn't a video wrap. I was traveling with one of my children for a school trip, which was awesome. So thank you for letting me take a break for a couple of days, spend some quality time. I did post some data, and this one particularly, gaps in October generally favor shorting up gaps more than down gaps. And if they're large, which today clearly was well below 1684, then they're 50-50. And then I looked at large gaps in general under similar market conditions, below the 10, above a 200. They're problematic. They tend to run stops. The market is scared, if you will. Following a higher daily close like we had yesterday, even weaker. So UCO zone. This means above or below the 10-day moving average. That's not a typo. That's basically getting rid of this 10-day filter, but everything else is the same, and opening the UCO zone weak. So I just said bottom line is really dependent upon which zones were neutral to weak, and many of the zones that we're opening in or close to them. And even if we open in the UCO zone, the gap size was a real concern. So it had to be less than 40% of the 5-day ATR in size, which means it had to open greater than 1684 in the UCO zone. Then I'd fade the gap with a half size position. Otherwise, I'll wait for the range guides. And today, let me show you the 5-minute guides. Whoops. We opened here at 1678.50. Assuming a tick of slippage, you'd have been filled 1670 to the long side, 1678 and a quarter, and the low of the day was 1673 and a quarter. Well, the stops today, if you didn't notice, were 5 points for the ES, and it really depended on the markets. You would have been stopped in the YM, for example. Let's see, what was it? It was 5 points today. The stop shown there. Oh, that's an archive. Hold on, going too fast. I'm about to be late to a church meeting I thought was starting at 6:30. It's at 6. As my wife just reminded me, and I don't like to be late to church. 5 points was the stop for today. So you'd have been Buffalo. That would have been an absolute Buffalo. And my analysis showing that the gap size made it too risky was right on. Unfortunately, the range guides, which I'm not going to show you because they just didn't show anything clear, weren't very compelling. They were slightly compelling for the low breakout, which I set up and thankfully didn't trade. It came very close to triggering. If it had traded to 1673, I'd have been short and possibly stopped. So, but there were no high probability, high expectancy trades using our guides that set up today. So, I didn't do any. So I did in disclosure. I did do a discretionary trade here, chased a little bit and missed my first target by a tick before it stopped and reversed for a small loss, tiny loss. But those are discretionary trades, not probability-based trades. So lost a little bit of money, but nominal and nothing compared to what I would have lost had I faded the gap today. So that was a good decision, and we'll see what tomorrow brings us. So there you go. That is the wrap for Wednesday, October 2nd. Have a good one.